Hi everybody, it's Ed back with another educational video, informative, educational, whatever. It's been quite a while since I've done one of these. I'm trying to get back on in the habit of doing them again so that I can show you guys what I'm seeing, what's profitable, what's not. I've gone back to an old standby of mine, which is trading to levels. And I used to trade to levels and I got out of it because I got sidetracked by something else. And so getting back to trading to levels using VWAP, which is I don't use MACD, don't use Bollinger Bands, don't use stochastics, don't use any of that. What I do have, and I don't have it on this chart, but the only additional thing is I have my own order flow study, which all it does is show exhaustion in a candle, where it is in a candle, and it shows buying, selling exhaustion, and it also shows VPOC, the candle volume point of control. Where's the most volume in that candle? Okay, and that is extremely helpful. I've got VWAP on here. With VWAP, I just have a daily VWAP extensions. I don't. I know other people use a anchored VWAP. I don't, because I want to see what price action did before, before I walked in the door or whatever, before RTH, so that I can get in. I can get a feel for what's going to happen at RTH. Okay. Now, I also have a volume profile. It's just a volume profile, a visible bar volume profile on that chart, which started at what? This is a 5-minute chart, so it started at about just after Globex opened. Okay, and you can see what happened at Globex open. You can just see with the VWAP, it went up to the, I have first and second deviations marked, standard deviations marked on here. Here's VWAP. The green line here is VWAP. The first cyan is the first standard deviation. The second one is the second standard deviation. Okay, and the rules around that are, number one, if it comes down and bounces off the first standard deviation, target the second standard deviation. A very reliable target. Target the second standard deviation. Okay, as soon as a couple of candles close, move your stop loss to break even +1. So if it comes back in your face like it did here, okay, if you targeted it here, it made it. If you targeted here just for a scalp, it did make it. It came back in your face. Well, what happens? And you can see a little doji. There's a little doji candle right here. So anyway, and then it came back down. Once it hits the second standard deviation, it drifts up a little bit. If it doesn't hit it again, it comes back down, and you target VWAP. If you'd taken the short up here, just target VWAP, boom, here you go. And then it goes up. First standard, the second pulls back to the first, and see, it didn't make it here, but it made it here. Pull back the first to the first standard deviation, second deviation, right up in here. So I had taken one off here. I was long before. Take one off there, and reverse, and wait for it to come back down. So VWAP is very, very handy for mapping out rotations, right? As you can see, since the VWAP was green, we're going green. We were long for the entire night. Okay. We dipped down here to the red, hit the first standard deviation to the downside. I reversed my position and then went up. I want to go real quick because I'm running out of time here. That's why I took that, and you can ignore all this other stuff if you want to. This is why you would take this right at pre-market. You're waiting for that, to see order flow. You're waiting to see something that basically says we're going to the upside. So what happens? We have a long candle here. We have a little bitty spinner candle here, which went to the downside but closed. But see how small that body is? There's not much there. So the second one, boom. So what you're having is, see all those green candles there? And you can see the head of the open and close are pretty close to the same, and the tail, there's almost no tail on that thing. Okay, so we're going up, going up, going up, going up. So anywhere, buying anywhere, if you bought the open, if you saw this and waited, bought the open, the open was at VWAP, okay? We go shoom, straight through VWAP. Any targets up here, okay? Now I've got targets at 53.50 and 62.50 and 71.50. Okay, that's just a 15-minute RTH initial balance, open range breakout, whatever you want to call that. I got the mid, I got the long, and I got the short marked. Okay, but can you see right here? Can you tell that price action plus VWAP extensions were basically saying we're going long? So you could have gone long back here pre-market, or just gone long at open. And you didn't really have a tremendous amount of chance to do that until there's your 945. For 930, 945, this has been established. It pulled back a little bit and then went straight up. So you could have bought there, one target there at long target. So 53 to 62 and then 62 to 71. Almost 20 points right there. So, you know, that was worth 20 points is $1,000 per contract. So, you know, you do great for the day, and you're done if you want to. What I had done was I had taken off up here and added one. Well, I had one going up. I got out here, came back when it bounced off that long target one. I had order flow there. Everything is pointing up. See the standard deviation bands. VWAP is pointing up. Standard deviation bands are pointing up. We are above that first standard deviation, which basically says, okay, we're trending, right? So here we go. Now we start. What do we see? We start seeing this kind of action. We start seeing the pullback and the launch back up to here. Can't get above that value area high. Number one, value area high. Look over here. Look how much volume is at that value area high. Look how much volume is above that value area high. Zero. There's almost no volume up there. So what that's telling me is that big bar there, that has to be sellers. Absolutely has to be sellers. There are no buyers there. That has to be a seller, a big seller up there. Now whether he's an iceberg, I don't know. And quite frankly, I'm not concerned about that. All I'm concerned is there's a lot of volume there at value area high, which has got to be sellers. So what happens? We came down, they came back up for another bite of the apple. That's when I reversed it. And when I woke up and said, we're not doing this, boom, straight back down. Okay? Now, there's a nice momentum move. See those big candles? Open, close, open, close, open, equal, close, open, equal, close, open, equal, close the previous candle. Come down. There's a very small green candle right there, just like you saw little, small red candles here. Small green candle there, but it was very small. What happened? And that was at VWAP. Right there, that's probably people that are short here. They're taking profit at VWAP, which is logical, okay? So if you take profit at VWAP and you come off that first standard deviation, where are you going? Where's the next logical place? The next logical place to start taking it would be the negative, the first standard deviation to the downside, okay? So you can see, and then there's the mid. It touched the mid, so people started right there. They rejected to the upside. People started, and that was obviously profit taking. It was a nice one, but see the small candles there? That was not that wasn't a reversal, obviously. That was not a reversal. It was just to the downside. So you want to watch these. 5-minute chart, by the way. You want to watch these. How big are those candles? It was a small candle to the upside. We're not going back up. What happened? Boom, came back down. There's your RTH, the initial balance, the short entry reject. Okay, short. That's what I would target. There's value area low right there. There's RTH open. So anywhere in here you targeted from up here, you made some money. Say, for example, if you wanted to come down you came down here, you got stopped out because you took the short at the long target 71.50, right? So you took it here, it came back up and then straight down. You're still in profit at 70 from 71.50 to 45. That's a chunk of change. You know, that's an almost 30-point move. That's like a $1,500 move per contract. So, you know, there's gold and then there are charts. Okay, so now what's happened? There's buy area low. You can see where there's volume here, but there's still volume here. There's people, you know, we're looking at levels down here that people had still been interested in historically, been interested in. So what happened? Came back down, just past that, okay? That level right there, if I can get my little pointer on it. Now, if you look left, that level right there is right at the end of value area. Now, where did it stop? Right there at about 41.25, okay? Let's look at 41.25. Let me look at that. Let's see, what's the low? It did not, yeah, there it is. That candle right there, the low was at 63.41. So where that volume started to peter off, that's where the market bounced. And this is the beauty and the power of volume profile. Watch where this volume tapers off. Watch where the volume goes away. To the upside, there's where the volume went away. Downside, volume went away. Poof, you're done. You're good. Okay. I think I mentioned this is a 15-minute open range breakout. So this just gives you nice targets for the day. Anyway, it's 10 minutes. It's 12 minutes in. I promised 10 minutes. It's 12 minutes, guys. Any questions or anything, feel free to post them. By the way, a big hat tip to Trader Drysdale, Trader Dale. All these guys that are doing VWAP and VWAP extensions and volume profile. Trader Dale, by the way, or Trader Drysdale, has a real nice trading room. He has a free side and a pay side. The paid side is like $50 a month. The free side gives you basically everything. Gives you his setups, gives you his playbooks, gives you everything, okay, for free. So if you want to pay $50 a month to trade live with him, I think it's a good deal. It's a really good deal. I will caution you, if you trade NASDAQ, he trades NASDAQ. He does not very often trade the S&P. He doesn't show I don't think he shows the S&P charts too much or other markets too much. But, you know, it's all the same stuff. If you look at it, if you look at these charts, like the equity chart, the S&P, the NASDAQ, all those kind of charts, they're going to look very similar. You can trade crude oil off the same chart, the same idea. You just have to adjust the settlement prices and the open times and all that kind of stuff. But everything else just works the same on every single market. So I'm coming up on 15 minutes in. So that's my absolute hard stop, hard limit. And it's like 5:30 here. I got to get ready. I got to fix dinner tonight. So, au revoir. Have a great trading. I hope you had a great trading day. If you put this on your charts, you see some structure. And this, by the way, the structure is any time frame, doesn't matter. Unlike other trading systems, which, like, you know, you put a fair value gap on a chart. Well, gee, where's that fair value gap? The fair value gap here on a 5-minute chart is not going to be the same as a fair value gap on an hour chart or on a 1-minute chart. So you got to be, you got to be a little bit careful about putting things on your chart that are going to change when you change your time frame. Anyway, that's it. Put comments, questions, whatever down here. I'm going to put a link to Chris Drysdale's Discord room. I think I've got a link there. To his Discord room, you get a free 7-day trial in there. Otherwise, it goes to paid. If you want to stay in there for free, there's a free chat. And you get everything for free if you want to stay for everything else. Cool. Awesome. See you in there.